So the next step is we're going to cover topics on recognitions of intangible assets. We did discuss the nature of intangible assets. Okay. So the next phase is how we're going to recognize the intangible assets. So before we go further, just go back to what we have covered before in PPE accounting, that basically it have these two rules. Number one is probable future economic benefit. Number two is we can measure the cost reliably. So same goes to intangible asset. Before we can recognize this as intangible asset, we must make sure there's going to be a probable, mean high probability of future economic benefit derived from that assets that will flow to identity from that assets. Number one. Number two is we can measure the cost reliably. So this is the criteria number one. This is criteria number two to recognize the assets. Okay. Intangible asset can never be recognized, yeah, if specifically internally generated intangible assets. In many instances, company involved in research and development activity, whereby under accounting standard it say research costs cannot be included as intangible asset as your asset. It should be expand off. So we have development costs. Yes, we can capitalize or recognize development costs as intangible assets. Okay, if it fulfill all the 6 criteria under para 57, yeah, but research cost is a big no-no. You will not allow to capitalize or recognize research cost as your asset. So this is the rule, yeah. Okay, the measurement. An intangible asset must be measured initially at cost. So for not for profit entity, sometimes they receive asset as a gift or contributions. Okay. Intangible asset may be acquired in the following way. Number one is by separate acquisition. You buy the assets. Number two is acquisition as part of business combination. You buy another company, yeah, take over another company at higher price. So the difference is intangible asset, what we call as goodwill. This is what we call as goodwill. Okay. Next one is internally generated assets. Okay. Okay, let me explain again. By separate acquisition is you buy the right. You buy the right for the software, maybe for the software. Yeah. You bought a software, special software. Yeah. So that software fall under your assets. Yeah. That is software. I can see there are many very good software, expensive software. Yeah. For example, if you are from accounting, we have this accounting software. Now the software is not installed already. It's a cloud-based software, cloud-based application. And when you buy your PC or your laptop, yeah, you don't only buy the hardware, but you still need to buy some software, for example, your Windows or your Microsoft Office. So these are the softwares. If you are from architecture, I think there are special software being used by the architecture by the architects for drawing their plans. So that might be incurred a lot of money for that. So that is separate acquisitions. Or sometimes the business acquire another company. A acquire B. So A is a company, bought company B. Okay. When you look at the book value here, the carrying amount of all the net asset and liability might be 100 million. But A, since B has established for a very long period of time, they have their reputation, good customers, products, and so on. A paid for 120 million. So extra 20 million. So why A willing to pay 120 million to B, even in their records? B assets, net asset is only 100 millions, because the managers of A realize that there is 20 million of intangible assets, might be the reputation, the locations, the technology, the know-how, the brand names, and that is they value that as 20 million. So that is the reason why they're willing to acquire company B at higher price. So in accounting, call it as purchase goodwill. So that 20 million is asset. Normally we call it as goodwill. Is 20 million. Okay. Next one, we have internally generated intangible assets. The company do some research. For example, we did like for the past 2 years, we have problems of coronavirus. Am I right? Okay, coronavirus. So testing is a big problem because you have to do your PCR test. You have to go to hospitals. Yeah, last time we have to go to hospitals. You have to take the swab. Yeah, I think I did almost 20 times. Yeah, because I did travel a lot, so that cost me a lot. Yeah, in Dubai it cost me around 150 dirham, 150 dirham. But when this thing started, the COVID started. Yeah, when I was in Malaysia, I have to pay around 600 ringgit. That is around 500 dirham for a test. So this later on, all the scientists of this pharmaceutical company, they come up with another different way to test whether you are COVID positive or negative. They have these many kits now, many self-study kits where you can put your saliva there and then check. It's like a pregnant test kit, am I right? Where you can check uh, whether you have COVID or not. So this is the new technology, yeah, the new technology. So this is the internally generated asset, not the plastic, yeah, the technology, the knowledge. So we have two components there. Number one is research. The second one is your development. Research means you develop the research, and then the next one you develop the product. So in accounting, this research cannot be capitalized. It's not assets. It's not assets. This go as your expense. Whereas development, if it meet the criteria, then you can put it as your assets. Okay, it put your under your assets. Okay, so separate acquisition, it means that the entity acquires an dual intangible asset, not a group of assets. You buy the software, for example. Asset obtained by a separate acquisition are measured at cost, how much you pay for that asset. The cost is determined as the sum of the purchase price and the directly attributable software. I'm using, in my work, I have this statistical or data analytic software. It cost me around, not much, I think around 1,000 dirham. 1,000. I'm using their old version, 1,000. But now they have come up with another version. It will cost me 3,000 to get the license for the software. So that will be the value of that assets should be determined based on the purchase price. Yeah, purchase price of that asset. Okay, and any cost directly attributable to the cost. So this is additional cost. For example, if I buy the assets 1,000 and there's a VAT there, there's also other things incurred. So all these costs incurred to assemble that asset, to install that asset must be, we have three times, all right? The cost, the purchase price, cost directly attributable for the PPE, and also cost for dismantling the asset for PPE. So in this case is purchase price plus directly attributable cost. So this thing should be included as the cost of intangible assets. Okay. Acquisition as part of the business combination. Yeah, I explained that this is a result from the acquisition process. A acquire B and so on. Intangible acquired as part of business combination. So no recognition criteria need to be applied. So we are going to use the fair value, and the fair value is always considered measurable. So this topic we're going to cover at the end of this semester about goodwills, yeah, intangibles. How we are going to measure the purchase price and we compare the fair value of that asset, and the difference will be the goodwill. For example, just give you the same example here. A buy B, they acquire company B. The fair value of net identifiable net assets, mean you check all the fair value of assets minus all the liabilities, is 100 million. That's based on B identifiable. Identifiable mean asset that you can identify is 100 million, but A paid B 120 million. The 20 million is unidentifiable, or this fall under goodwill or intangible assets. Number 3 is internally generated intangible assets, whereby this internally generated asset may be created over a period of time. Okay. So in contrast to separate acquisition and business combination, where there is a single acquisition date, we have one date. When you buy the assets, you buy the software, you bought another company, you have some date, you have a date that you refer to the acquisition date. Yeah, the contract date or the invoice date, that will be your basis. However, for the internally generated intangible assets, for example, for the vaccine, COVID-19 vaccine, the business company like Pfizer, okay, maybe AstraZeneca, yeah, this company, or Sinopharm company, they took very long period of time, maybe more than 1 year, to produce the technology, the knowledge, yeah, the formula to produce or to produce the vaccine. So they did a lot of research, they did a lot of testings, yeah. So it for maybe for 1 year or 2 years, more than almost 2 years. So we can divide that process to two phases. Number one will be the research phase. Number two will be development phase. It's quite difficult. It's quite difficult for a layman person to distinguish that process. But the scientists, the researchers know when is the research phase, and when we move to the company move to development phase. They know better than us. We have this formula and the accounting standard, 6 criteria, to see whether it fall under development phase or not. I'm going to explain to you after that. So generally, I can say that research, all expenditure incurred during the research phase cannot be capitalized. Capitalized means go as asset, it go as expenses, whereby once it reach the development phase, all single expenses, single dollar, can be recorded as intangible asset known as development assets. Yeah, development cost. So that go as your intangible assets. Okay. So for research, what is research? Under para 8, it say that research is the original and planned investigation undertaken with the prospect of gaining new scientific or technical knowledge and understanding. So, for example, you have a company. Your company do research to find cure for COVID-19. I'm not sure we have the cure or not. We only have the vaccine. Now we are talking about the cure. Okay. So, you want to produce the vaccine. So that is your research, yeah? Original and planned investigation with the prospect of gaining new scientific and technical knowledge. You want to have new knowledge, new scientific knowledge, yeah? Research would be undertaken in the early stage of the project. Before we produce the vaccine, we need to do the research first, and this fall under expenditure. Whereas the development phase of the project is started when the research phase ended. Okay, so the outlays are classified as development. So an intangible asset arise from development outlays. So when you started your development activities, that is where you should capitalize all that expenditure, the labor, the scientists, the material, yeah, even the electricity bill, whatever, all costs can be capitalized as development costs. Development costs can be recognized as assets. Okay. So how we're going to recognize whether that phase or that process can be capitalized as development cost or not, can go as intangible asset. They have six criteria. Six criteria. Number one is the technical feasibility. Okay, you know that you are feasible to produce, to continue with the development project. Yeah, you have ways, you have the techniques to complete the project. Number two, you have the intention, aims to complete the intangible assets. Number three, the output will be able to be used or sell. For example, the company, the output, the COVID vaccine can be used or sell. You can use, you want to use it yourself, or even if you want to sell the development, the products, so or service. So that is criteria number three. Number four is you know clearly that the intangible asset will generate probable future economic benefit. It will give advantage to your company in the future. This is for this another two. You have available resources, yeah, to complete the project. You have available resources, yeah, to transform your research to outputs. And number six, you can measure the cost reliably. So these are the six criteria fall under para 57 IAS 38. So you must fulfill all these six criteria. Then you can record it as your intangible assets. Okay. However, the standard did put some exception on certain type of asset. For example, internally generated brand, the masthead, the publishing title, the customer list. All these cannot be recognized as assets. Okay. Let us look at this example. We have this example, okay, from our textbook. Two Rocks Limited is a highly successful engineering company that manufactures filters, yeah, for your AC, for your air conditioning system. Yeah, this is your AC. Okay. Due to its dissatisfaction with the quality of filters currently available, on 1st January 2023, it commenced a project to design a more efficient filter. So this will be the output. More efficient. You want to have this technology, the technical skill, the scientific knowledge on how to produce more efficient filter, the AC filter, the aircon filter. So how does it start? On January 2023, paid 145,000 salaries for engineer consultant who conducted basic tests on available filter with varying modifications. So they start doing their research there. So this fall under research because you don't know, you don't achieve anything yet. It's still under a research stage. Okay. And then month after that, spend 165,000 on developing new filter system. You are trying to produce a new filter system, including the production of basic model. It became obvious that the model in its current form was not successful. You try to produce one filter, maybe model 1001, but it not successful. Okay, so not successful means it's still under research. Just put here R. Fall under research. Research will go to your income statement. Go to your income statement. Okay. Okay. In March, acquired the fiber division of Sand Hill Limited for 330,000. The fair value of the intangible asset of this division were 180,000 for inventories and 80,000 180,000 for property, plant and equipment, and 60,000 for inventories. So total is 340. Am I right? 340. This is the fair value, but you buy it at very low cost here. No, 330. This is 240. This is 240. Okay. The business was acquired because one of the product it produced was fibrous compound sold under the name of Foamy, which Turok considered would be excellent in including the filtration process. So you are buying this company to get this fibrous compound, yeah, fibrous, okay, yeah, because the company produce this product. So you want to see whether it can help you with your research and development costs. By buying the fiber division, Turok acquired the patent for this fibrous compound. So the patent is the assets. This is your asset. It fall under the criteria number 2 or in the process of recognitions, not criteria number there's the options, yeah, where you acquire the intangible assets. So the patent value is 50,000, and they also have the brand name which you can acquire in this case 40,000 using a number of valuation technique. So this will be your intangible assets. The patent has 10 years life but was renewable on application. Further costs of 50,000 were incurred on the new filter system during March. So you still don't know how to produce the new more efficient AC filter, but you acquired, yeah, patent and trademark worth 50,000 and 40,000. We don't reach the development stage yet. In April, spend 135,000 on revising. You come up with revise your product. Okay, to incorporate the fibrous compound by end of April, Turok Limited was convened. Now they convened that it now had a viable product because preliminary tests, very early tests, showed that filtration process was significantly better than any other available on the market. So in April, there is a signal that the research seem able to produce or come up with a new scientific technology to produce the more efficient AC filter. Okay, seems like, yeah. Okay, and then they try to develop a prototype, a sample of the filtration component and proceed to test it within variety of model of air conditioner. So they are producing the prototype and perform additional testing. Yeah, additional testing. The company preferred to sell the filtration process to current manufacturing air conditioner manufacturer if the process work with the current available model. If this proved not possible, the company would then consider developing its own brand of AC using the new filtration system. So they are trying to get a buyer for the product. If the product can suit the maybe different companies, so they will sell the technology, the process, yeah, the process to maybe various AC manufacturer or producer. By the end of May, the filtration system had proved successful by end of May, but one of the current available on all, but one of the current available commercial model cost incurred 65,000. So during the test, now they realize that they have a chance, okay, to commercially produce that product. Okay, so this is a good indication there. End of May. In June, various IC manufacturers were invited to demonstration on the filtration system. Cost incurred 25,000, including 12,000 on food and beverage for the prospective clients. The feedback from a number of companies was they were prepared to enter negotiation to acquiring the filters from Two Rock Limited. So this is good news. The company now believe it has successful model and commence planning on the production of the filter. So the research has successful. Ongoing cost of 45,000 needed to refine the filtration system, particularly the light of comments of the manufacturer were incurred in the later part of June. So we have this project run for 6 months. So the question is how you are going to record all these transactions. Which one should go as asset? Which one should go as liability? Not liability, as expense. So let us look at the answer here. I did provide the answer here. It's available in your textbook. The main problem in accounting for cost is to determine the point to that allow you to start capitalizing the expenditure as asset. So this is the issue about date. The issue about date, or the issue about when you can start capitalize it as your assets. So you have to perform the 6 tests. The 6 tests under para 57. Under para 57. Sorry. Para 57. Number 1 is technical feasibility. At the end of April, the company believed that the filtration process was technically feasible. So in the context of technical feasibility, we can say starting from May, because at the end of April, you already believe that this thing works. Okay. Number 2 is intention to complete and sell. At the end of April, the company was not sure that the system was adaptable to currently available model of air conditioners. Even though you can say that you are able to produce that, you have the technology, the scientific knowledge to improve the filters, yeah, but you're still not sure whether the system, the technology can be adapted by other aircon AC manufacturer. So if it was non-adaptable, the company would have to test whether development of its own brands of AC would be commercial propositions. So this is the next phase, yeah. Hence, it was not until the end of May that the company convened it will complete the project and had a product that it could sell. So cannot be May, because you only confident believe that you can sell the product by the end of May, when until the end of May, yeah. So that's criteria number 2. Criteria number 3 is ability to use or sell. So at the end of the May, the company believe that the product is ready. Okay, they have the ability, they have the customer to sell the product. They have this manufacturing capability. They have this acceptance from the market, from the customer to buy the products. Okay. Number 4, existence of the market. So in this context, the market comprised of the AC manufacturer. AC manufacturer. That's me. Next is available of resources. From the beginning of the company, the business does not have any problem, any short of cash. So that is not a big issue. Yeah. And finally is ability to measure the cost reliably. Ability to measure the cost reliably. So costs are readily attributed to the project through its development. On the basis of the above analysis, the six recognition criteria were all met. Were all met. This is number 5. This is number 6. Technical facility number 2, number 1, number 2, number 3, and number 4. So in your exam later on, you have to justify based on the 6 criteria. So everything before that, any cost you incur for research is from January, February, March, April, May. This will go as your research expense. In simple word, I say it go to your income statement. Okay, income statement. Sorry. This, let me just change my pen. Is 145,000 salary. 165,000, still remember? 145,000 in month of January, 165 in month of February, 54 and 135, 54,000, 54,000. This one. For the cost were incurred. This is not the. This is the intangible assets. Yeah, this is different. Yeah. For the cost, 54,000. This one is already intangible asset, but does not relate with your research. And then you have another 135,000, revising the filtration. Okay, revising the filtration. And finally is 65,000. Okay, these are all be recognized as your research expenditure. You go to your income statement. Okay.